Our next speaker for the morning is Ms. Amy Wong, the Executive Director at Knight Frank Malaysia. Ms. Amy is a seasoned expert in master planning and real estate consulting with over 2 decades of experience in the Malaysian real estate industry. Specializing in multi-scenario highest and best use studies for traditional and emerging asset classes, she has authored research white papers on trending issues such as data centers, senior housing, and ESG adaptation in real estate. Her corporate tenure includes leadership roles at Saville, CBRE, and Sunway Property, where she established a renowned in-house property think tank and spearheaded impactful research initiatives. Without further ado, please welcome Ms. Amy.
Right. Good morning, ladies and gentlemen. Thank you, Hong Leong Investment Bank, for inviting me here today. Happy New Year, everyone. Okay, so today my task to provide an overview of the Malaysian property market in 25 minutes. All right, so you can see here that my title, Shaping Tomorrow, Key Trends and Insights into the Property Market. So, Puan Samila has given a very comprehensive overview of the government statistics on the Malaysian property market. Today I'm going to give you from the commercial point of view, from the developers, the players, what are their sentiments. That's part of our CREST report, which is the Malaysian Commercial Real Estate Sentiment Survey. This is where Knight Frank Malaysia, one of our flagship reports, we actually surveyed developers, financiers, and investors and see what are their perspectives, how was 2024 for them, and how will 2025 be like in terms of their plans for investing and entering the property sector in 2025. So we launched the CREST report on the 6th of January. It's 11 pages about the sentiment. And then just on Monday, we launched the Real Estate Highlights report, which is a 55-page report highlighting strong growth across the key sectors of industrial, office, retail, hospitality, and high-rise residential sectors across the key cities of Klang Valley, Johor, Penang, and East Malaysia, Sabah, Sarawak. So this morning, I'm going to give you a snapshot of these two flagship reports that we have produced. We'll be looking at market activity, transactions, sentiments, forecasted growth, and we'll explore what this means for the Malaysian property market in 2025. So let's dive straight in. 25 minutes, I'm very conscious of that. So let's go into Klang Valley. Okay, the 55-page report will be available for you to download at the end of this presentation. And I think I can make the slides available to everyone here. Okay, so you don't have to snap pictures. All right. Industrial sector in the Klang Valley. Right, market highlights. So the industrial sector, as we all know, is experiencing growing interest. The fact that Malaysian industrial sector has always been what I call, we were only at a very preliminary baby level, I'd say. It's just 4 walls, a roof, just essentially a shed. But over the past 10 years, we've actually grown to incorporate more investment-grade assets, smart and sustainable facilities, where you see landlords redeveloping older factories and warehouses into modern, high-grade facilities, for which the key considerations here would be sustainability and innovation. So innovation will include whatever you put in, the automatic racking systems and the like into your warehouses, smart warehouses, right? And this aligns industrial spaces with evolving tenant demands. We also see that the industrial REITs are demonstrating strong confidence in the sector's growth potential. We see industrial REITs actively acquiring assets to capitalize on all these emerging opportunities that are coming up. And we think that this momentum will continue to persist as REITs continue to leverage innovative asset strategies to unlock value by redeveloping older assets into modern and sustainable facilities. We also see that the Klang Valley's industrial sector performance will be bolstered by high levels of approved private investments, as shown by the impressive figures in the first 9 months of 2024. This reflects pretty robust investor sentiment and signals continued economic growth for the industrial sector. The sector remains stable in prices and rental rates so far, underpinned by sustained demand and a pretty resilient market. We have higher quality assets coming into the market right now, such as Grade A warehouses, and these are commanding premium rates and underscores strong fundamentals such as confidence by both investors and occupiers in this sector. What are these other fundamentals that we're looking at? If we look at the industrial production index, this is projected to maintain a positive trajectory. And then trade performance also continues with upwards in third Q, growing by 13.6%. So there's also trade surplus, exports have increased, and all these look pretty good. If we looked at approved manufacturing investments, because this is the industrial sector we're talking about, and it's not just about REITs investing in industrial properties, right? It's also about our occupiers, who's occupying all these Grade A warehouses or good quality manufacturing factories. So in the central region, Klang Valley approved 264 private investments totaling 15 billion ringgit. So it's the second highest contributor after Kedah, if we're looking at 9 months statistics, because the full year one hasn't been released. Negeri Sembilan also shown impressive growth in the central region and is among the top 5 contributing states. In the northern region, Kedah, the country's leader in terms of approved investments, contributing almost 33 billion ringgit, accounting for about 37% of total manufacturing investment. Penang, on the other hand, there's a decline in manufacturing investments, dropping by 69% in 9 months 2024. However, FDI remains the largest contributor right over here. As you can see, it's mostly driven by FDI, 83% in total. In the southern region, Johor recorded a 13% increase in manufacturing investments, totaling 8 billion ringgit. And in East Malaysia, Sarawak, 5 billion ringgit in approved investments, just ranking slightly behind Negeri Sembilan. And Sabah saw 2.4 billion in approved investments, which is a 79% increase 9 months year on year. Okay, in terms of the industrial sector, real estate, I think Puan Samila gave a very good overview just now already. But you can see that there has been a significant increase in transaction volumes and values year on year, reflecting strong market performance. And in Klang Valley, we saw 2,208 transactions amounting to 10.8 billion, which is an increase of 9% in transaction volume, but an impressive 26% increase in terms of values, transaction values, yeah. Okay, right. And let's take a look at these factories, incoming logistics and warehouse spaces. So I mentioned earlier that we are leveling up in terms of our industrial assets. Smart and sustainable facilities, we are seeing this in the industrial sector as businesses continue to prioritize efficiency and they look at durability. So when I mention sustainability here, I don't just mean green. I mean durability, long-term growth, going the long mile. Right? So in response to this trend, we see landlords redeveloping older factories, older warehouses, which are cheaper to acquire, and developing them into modern high-grade facilities. Right. Okay. Notable investment announcements in 2024. You'll be able to see this, but you'll see that Cherry came in, there's a J&T Recycling Corp, and DHL also invested 300 million ringgit in a state-of-the-art, fully automated sorting facility at KLIA. So these are amongst the many headlines that we saw last year. Definitely, if I haven't mentioned earlier, 2024 was a year where we saw a lot of things happening in the property sector. And industrial sector was one of those which grabbed the headlines. So right, let's now look at industrial prices. We saw during the review period, asking rentals remain stable, despite the fact that we have demand, but asking rentals have not yet seen a spike. Premium rental rates are about 2 to 2 ringgit, 2 ringgit to 2.50 per square foot, which is observed for higher quality industrial assets, especially in areas like Bandar Bukit Raja. With anticipated increase in the supply of higher quality industrial properties, we see that industrial rates are expected to trend upwards in the foreseeable future due to strong demand. In terms of transacted prices for vacant industrial lands, which are less than 15 acres in Klang Valley, there are differences in these prices and they are based on factors such as location or scheme, accessibility and frontage, land size, tenure, infrastructure level, your built-up area, specifications, and other related considerations. But just within these four walls, I would say that if you're looking at Klang Valley, to acquire industrial land in Klang Valley, it is extremely limited. Yeah, and if you go ask the industrial guys who are on the ground, the agents, they will tell you the same. So where do you look for industrial land? Okay, so I'm going to touch a little bit about other states. So for industrial sector, let's look at Johor and what's going on there. Because there's the SEZ, right? And naturally you have to look at the industrial sector there. So overall industrial market activity in, we're looking here at the districts of Johor Bahru and Kulai. There was only a marginal increase of about 6% in 9 months 2024. Market activity actually softened a little bit in Johor Bahru. Although higher value industrial properties was noted to change hands. So we saw higher value properties changing hands, but market activity softened somewhat. That is in the district of Johor Bahru. It could be because of limited supply in the district of Johor Bahru. But if you take a look at the district of Kulai, strong market activity, transaction volumes rose by 67%, transaction values nearly doubled from 430 million to 830 million ringgit in 9 months. So that's what we see in Johor. In terms of notable investments, we saw Guthrie signing an MOU with AME Industrial Park, the premier industrial park player in Johor, developing a 641-acre green industrial park in Kulai. Crescendo, I'm sure all of you know Crescendo, who was constantly in the news last year for data center sales. We also saw Chinese companies coming in, expressing interest in establishing manufacturing facilities at Sunrise Gerbang Nusajaya plot. And also Petronas collaborating with Italy and Japan's companies to establish a biorefinery at Pangerang. So Pangerang has also, if you've seen the SEZ announcements, you'll see that Pangerang has also become part of the SEZ. So previously Iskandar Malaysia, Pangerang and Desaru wasn't included, but then now they are in the SEZ already. So the SEZ has actually widened the Iskandar Malaysia borders. And I think Iskandar Malaysia may no longer be a term in play. Okay, right. Okay. Right. Okay, Penang. Market activity has declined as per the approved manufacturing investments, but foreign investors continue to be a key contributor. And who has come in to Penang? You see Ideal unveiling a 28-acre industrial park within Penang Technology Park in Batam. You see Gamuda launching Silicon Island. I think they'll speak more about it after this. And also, of course, Penang launched the Silicon Design 5-kilometer plus initiative, which is a comprehensive ecosystem for IC design and technology enterprises near Bayan Lepas Industrial Park. Okay, overall industrial market outlook. Investor confidence has fueled the growth in high growth sectors, such as green technology, transport and logistics. You see strong performance supported by strategic infrastructure. And however, because industrial is a darling sector, right? So every single developer has decided to expand their industrial land bank. So naturally, there will be competition expected from all the emerging industrial townships. And let me tell you, the developers are there to up the game. They will be building better industrial parks than we have ever seen before in Malaysia. REITs continuing to adapt to evolving market dynamics. We will be seeing, from the investor's point of view, fund manager's point of view, you'll be seeing better quality, better portfolios of industrial assets coming into their portfolios over the next couple of years. And we think, Knight Frank's in-house view is that Malaysia is well positioned to leverage demand that's coming in from all corners of the world and to overcome whatever global challenges there are right now. The chess pieces are all in place, at least for this year, for Malaysia to actually take advantage of ourselves being an industrial hub. I think you guys know what I'm talking about. Even with everything else going on in the world, Malaysia and being part of ASEAN and Southeast Asia, and the fact that we are excellent value for money, and a stable political environment right now, as compared to the rest of the Southeast Asian countries, we can ride on this wave over at least the next 12 months. Okay, next, office sector. Klang Valley office sector, which is where all the offices are located. General market highlights, over the review period, actually we only saw 400,000 square feet of office space completed in one tower, which was in PJ. Paramount completed Atwater Corporate Towers. So looking ahead, we are seeing approximately 1.6 million square feet of new supply expected to be completed in first half of this year. Klang Valley office market has shown resilient demand with MNCs coming in, companies, SMEs coming in to expand or to relocate their offices. So this has added on to improve occupancy and rental rates across all sub-markets, with KL City and KL fringe areas recording notable occupancy gains. Occupiers continue to favor green certified buildings with flexible layouts, modern amenities, which has driven higher occupancies and higher rents in prime grade A and A+ offices. This demand is not just driven by our typical oil and gas and finance sectors, it's now across diverse sectors such as AI, technology, and professional services. So looking at the supply, first half of 2025, this year will see the completion of 4 new buildings, contributing 1.6 million square feet of office space to the Klang Valley office market. These projects are the Exchange TRX office by Land Lease, as well as Oxley Tower in KL City, TNB Go Bangsa in KL Fringe in Bangsa area, and Sunway Square Corporate Tower 2 in Sunway Selangor. Okay, taking a look at occupancy rates and rental rates. So we see that the occupancy rates in Klang Valley display a bit of a mixed performance. KL City and KL Fringe, I mentioned earlier, recorded incremental improvements. Occupancy rates rose from 67.5% and 87.2% respectively, with KL Fringe still being more highly occupied than KL City. But because KL City saw 118 coming in, so there was a bit of a drop, right, earlier in 2024. But now we're seeing a sort of stabilizing of this. This increase in these two submarkets are actually driven by tenant relocations to these prime offices, renewed leasing activity, as well as our office leasing team is seeing business expansion spurred on by improving business sentiment and demand for higher specification office buildings. Conversely, we see Selangor experiencing a slight decline in occupancy. So we are seeing some offices moving out from Selangor towards KL City, where the newer office buildings are located. And from this trend, I guess perhaps you can see that it's not so much about location anymore as long as you are close to a train station. The decision to shift offices will be about who has a newer office and where the newer office is, right? As long as there's a place for lunch, I think we are set. Okay, in terms of rents, all submarkets in Klang Valley office sector recorded positive movements, finally, right? Office rents have stayed the same forever, I think, for as long as I've been doing this. So growth rates actually vary across different markets due to the various dynamics. So in KL City itself, we are seeing that it rose to 6 ringgit 64 per square foot per month, driven by demand for newer, well-located Grade A offices and also a recovery in leasing activity among multinational tenants. KL Fringe, which is your Bangsa, KL Central, Mid-Valley area, there was a modest increase because there wasn't any new office building that came in. So now it's at 5 ringgit 78 cents per square foot per month. But KL Fringe continues to be a very stable office market with the highest occupancy because it is the most well-connected. And I say most well-connected because the LRT line runs across the KL Fringe. And somehow the LRT line, even though it's a smaller train ride than the MRT, it is still the most established, the oldest train line, and still the location where most offices are preferred or preferred by the workers. MRT ridership is growing though. In Selangor, we saw average rents increase to about 4 ringgit 21 cents per square foot per month, with the new supply being Atwater Corporate Towers in PJ. Asking rents for prime A plus and grade A office buildings. These are the best buildings in the city. And the CBD area commands higher rates ranging from between 6 ringgit 50 cents to 15 ringgit per square foot, for which prime A plus buildings 850 to 15 ringgit per square foot. So rents are indeed going up, and you'll see this is proven by the fact that Exchange 106 has finally started being more occupied. From being stuck at 15%, finally going up to 20%, and finally breaching past that gap. Rents are also going up in Exchange 106. As we know, Exchange 106 is the only speculative office building in TRX. The rest all are owner-occupied. Okay. So who's moving where? Okay, of course I couldn't put names here, but as you can see across, in Exchange 106, we saw a telecoms player shifting in, taking up approximately 142,000 square feet. In Plaza Conley, we saw a financial service bank taking up 110,000 square feet. Integra, co-working space operator, took up 24,000 square feet. In Gardens North Tower, banking and financial services as well as employment agency took up 79,000 square feet. What else? Gardens North Tower as well. Okay, that's a repeat. And then in Mercu Mustafa Kamal in Selangor, we saw education sector take up 32,000 square feet. And in Menara Celcom DG, F&B corporate shared service took up 52,000 square feet. So you do have players taking up large floor plates and shifting around. In terms of market outlook for the office sector, we see steady recovery for the office sector finally after seeing so many super tall towers coming. I hope not to see any more in the near future until we fill it all up. Moderate supply pipeline, thank God. I'm no longer saying huge incoming supply. We're no longer saying that, it's moderate. Okay, so it's tapering off, letting us all take a breather. Prime locations will drive demand, especially driven by the MRT line finally, because the LRT line is already very packed. There exist opportunities in asset repositioning. So, you know, all these office buildings that are being completed, there are people shifting, as we know, our neighbor just across the road, right? Shifting across to 118, and what happens to the old buildings? Old buildings, not just highlighting one building. what happens to all these old buildings? So I think all these old buildings are located in very good locations, strategically located, fantastic addresses. What do you do with them? There is that opportunity to reposition them, redevelop, refurbish. And for property, it is about the location. So they have the location going for it. It's only who has the capital to enhance these assets, right? And we think that, however, there is a cautious, I must say that there will be a cautious investment climate because the office sector is still talking about corporate sector, and we are still very much liable to the global headwinds that are happening around the world, as well as the uncertainty that everyone deals with every single day whenever a new president or prime minister comes on board. Okay, next, retail market. Okay, this is actually my favorite sector to talk about, but I haven't been able to say anything about it for a very long time. Klang Valley, market highlights. Klang Valley retail market is set to grow with an additional 1 million square feet of retail space. Retail sales has grown by 3.8% in third quarter of 2024, driven by strong domestic demand. Okay, no, driven by domestic demand. I wouldn't say strong. And some tourist spending, returning tourist spending. Despite the fact that it is tapered off by rising costs, we are all feeling it, I'm sure. Where you used to be able to buy 2 or 3 plates of nasi lemak for the family, now you can only afford 1, right? All of us feel that, right? A bowl of noodles. Yeah. So anyway, new developments, new malls that came on stream were Bloomsvale in Oakland Road, Elmina Lakeside Mall, as well as the recently opened 168 Park Mall, and all these highlights that thankfully developers are not just doing mega malls anymore, no longer the large super regional malls, but there's a shift towards neighborhood-centric, community-focused retail spaces. And I think this is driven by the fact that all these plans were drawn up, all the plans for these malls were drawn up during COVID. You know, it takes four years to finally hit the market, right? So during COVID, you all had that, was it 5, I can't quite remember, was it a 5 kilometer, 10 kilometer radius thing? You cannot go shopping past that, otherwise you hit a roadblock. So yeah, I know that those days are past us already, right? But you can still remember. So there were also major acquisitions of shopping malls that happened during the year. This includes Tropicana Gardens Mall, Deepal Shopping Gallery, and 163 Retail Park, which shows that there is investor confidence in high-quality, strategically located retail malls. Right. Okay. In terms of supply, I mentioned earlier, neighborhood malls are the ones to look out for as they come into the market, and the expected new completions in 2025. Who are we seeing coming into the market this year? Sonada Mall at KLGCC by Sun Derby, Sun Surya Forum at 7th Avenue, Pavilion Damansara Heights Phase 2. The reason why Phase 1 is so quiet is because we are waiting for Phase 2 to complete and then connect to the MRT. Yeah. There's also, there's one more mega mall coming. Okay, sorry, I shouldn't say IO. There's one very huge mall that has taken many, many years to complete, but it's expected to complete this year. This is Hexter World at Empire City, which will be 1.8 million square feet in terms of NLA. It is entering the most retail saturated space in the country, which is the Damansara shopping zone. Yeah. Okay. Yeah, that was a research-led statement, not sentiment-led. Okay. Right. And 118 Mall down the road, 1 million square feet. Also expected to complete by the end of this year. Hopefully. But I know everybody, all developers especially, one day is trying to complete in time for ASEAN Forum thing. I think they're also rushing Park Hyatt if they can. Okay. Occupancy rates, thank God, it's continuing to rise, reflecting the resilience of the retail market. But I would say that the retail market for the prime assets, it is driven very much by the fact that these are well-managed malls held by reputable fund managers. And so therefore, they have done a very good job in coming back and bouncing back from the pandemic. Occupancy rates are also fairly high. We are now averaging at about 86% occupancy. I mentioned earlier the 3 key retail malls which were transacted last year. IOI Mall bought Tropicana Gardens Mall and renamed it to IOI Damansara Mall. And then Keep REIT bought the Pulse in Cyberjaya, and Sunway took over 163 Retail Park in Montclair. So general market outlook, retail sales growth has gained momentum. There will be community-centric malls leading the expansion of the retail market. Government policies will continue to focus on driving spending, but cost continues to remain a challenge for all of us. Inflation challenges will spur retailers to rethink pricing and operations. Investor confidence in prime assets, prime retail malls continue to do very well. And in terms of your retail experience, technology and experiential retail will continue to shape how these shops will look like in the malls. Okay, very quickly, next, hospitality sector. In the Klang Valley, which is the focus of where the ASEAN Forum will be this year, Malaysia's economy has shown resilience actually over the first 9 months of 2024. And in terms of the tourism sector, KL is leading in terms of existing hotel room supply with a very strong pipeline of new hotels, especially mid-scale properties managed by international brands. So I think Malaysian developers have realized that you can't just be building 5-star, 6-star hotels and charging mid-scale rates, right? It doesn't make sense. So now we're looking at mid-scale properties managed by international brands. Hospitality sector is recovering slowly but surely with tourism coming back in. I think last year we saw a lot of headlines, Malaysia, KL, Ipoh, all these being the location to look out for. I think there was one headline where we beat Bangkok in terms of tourism arrivals, which I'm like, really? Okay. Government is, however, really driving and boosting tourism through infrastructure enhancements and promotional efforts, including Visit Malaysia Year 2026, as well as upgraded entry facilities. Anyone flown yet? Have you tried the new My Border Pass? No, should try it. Download that app. It will get you past immigration in 5 seconds. Yeah, that's what they said. They actually managed to do it. It's quite impressive, yeah. I like this chart because this one shows Southeast Asia. Yeah, international tourism looks like, you can see here 2019 to 2024, right? We compare with 2019, and how far away are we from the 2019 numbers? We are now at 12% to hit 2019 numbers, which is pretty good. Fantastic recovery there, I think. Also because we are, how do I say? We are a very nice place to have holiday because your money stretches so far. You can have a few more days of holidays. But then it doesn't really work for Malaysians, right? Because now you go to Perhentian, it costs you like 4,000 ringgit, right? So it's better for us to travel overseas. Yeah, I know, but then this one is for international money. We want the international money to come in. Okay, we have shown strong recovery, as you can see here. Aviation sector, we have more flights coming in, and more airlines looking to operate. And I'm hearing things like, in terms of infrastructure, the airport improvements are also in place. I'll show that in the next slide. There's also the impact of visa exemptions. Visa exemptions is definitely something that you should take note of, especially the fact that wasn't it so easy last year to get in and out of China, right, without that visa application? So there is an impact when there's a visa exemption. So latest government policies, I mentioned earlier, all these infrastructure updates to KLIA, Subang Airport, Penang International Airport, KK International Airport. It's about time they upgraded all these airports, right? Okay. And then in terms of hotel room rates, we are seeing Klang Valley having 55,500 rooms across 197 hotels, with 11 new properties coming up in the pipeline. And which are these hotels? In 2024, we saw the opening of Courtyard by Marriott. I think this one is at Auckland Road. Holiday Inn, Hyatt Centric, Imperial Lexis in KLCC, and Lloyd's Inn. As well as Ibis Styles, Moxie Putrajaya, and Capsule Transit Max. Rising occupancy and rising room rates having surpassed pre-pandemic levels. I think I must give a clap to all these hotel operators because they managed to survive despite the fact that they couldn't get enough housekeepers to turn around the rooms quickly enough. So market outlook, it's highly reliant on tourism, and we will see that increasing this year coming into the city and to Malaysia. We are also seeing medical tourism growth. MM2H revisions, don't ask me about that. Government policies and incentives are in place, especially with the ASEAN chairmanship. There is growth in aviation sector, and we are seeing recovery in terms of average occupancy rates and average daily rates. Okay. Now, residential sector in the Klang Valley. Oops. But this is the sector everyone wants to hear. Okay, I'll tell you what, you guys. I have just only a few more slides. I'm going to breeze through this, and if there's any questions I couldn't take, we can take it after this, okay? Residential sector, market highlights, high-rise residential. I'm going to focus on the high-rise residential market because that's where all the developers are launching new stuff. If they launch new stuff, it's high-rise, right? And yeah, although the speakers later, I think I will talk about that. But anyway, high-rise residential property market in KL showing growth and improved transaction activity despite the fact that the Chinese buyers are not coming in yet in a big way. However, it is a positive trend that we're seeing. Supply and demand expected to strengthen, hopefully with the launch and preview of new projects. You will notice that the Malaysian developers haven't exactly been launching. They have been very cautious in launching new projects. So this has somewhat been able to taper down the new supply that's coming into the market, giving the market, the residential market, a little bit of a breather. Property prices have remained stable. Rental trends, somewhat of a mixed bag because of very varying tenant preferences and high market competition. And if you want to talk about the Residency Madani initiative, this is for the affordable housing, which continues to be driven by the government very much. Okay. Transaction volume and values for high-rise residential markets slowly going up. We are seeing 3,625 new units for luxury high-rise residential units entering the market, for which we saw Core Residences, Atrium, Alpha Bangsa, and Kami Montiara completing in the second half of 2024. Demand for luxury high-rise residential remains stable, with notable launches being a few in KLCC as well as in Kampung Baru and Ampang. Okay, general market outlook, we think that it will be a stable market, residential being our bread and butter sector, and the key sector which drives property market transactions. Government initiatives will continue to focus on home ownership, which means focusing on first-time home buyers, focusing on affordability. Private sector will continue to support the market momentum by bringing in new supply, but we are seeing that there's a lot more initiatives now with private sector working closely with banks to drive home ownership in their own way in terms of home financing. There are investment opportunities available in KL as KL continues to be the main capital for which it is the entry point for international buyers looking to come into Malaysia, as we continue to remain the working capital of the country. However, we do see that there will be challenges in terms of long-term resilience moving forward. We think that developers can no longer just be building the same old, and we are indeed seeing efforts by developers looking at building townships, communities, integrated developments, offering facilities and amenities to residents in better projects. Okay, right, in Johor. We have to talk about Johor for residential because everyone's asking, the SEZ. What is it bringing to Johor? So you can see here, transactions have gone up for high-rise residential market, especially for those located near the RTS. And if you see transaction volume in 2023, the orange one, you can see that transaction volumes and values have risen steeply for high-rise residential properties in Johor Bahru. I think, if I ever mentioned this before, last year I was saying that if you look at these numbers, right, it goes hand in hand with the fact that a couple of factors. Singapore's HDB rentals are extremely expensive. Singapore's workforce is closely related to Johor being able to provide that workforce. And these people therefore live in Johor. These are Johorians who are working in Singapore, right? So with that in place, as well as the fact that we have hybrid work policies now in place. Not everybody needs to go into their office in Singapore every single day of the week anymore. Some of them only need to go in once every alternate week, right? Or only twice a week. So with that in place, you will see that these policies will then drive residential home ownership across the border in Johor Bahru City, especially if you are close to the RTS, which you can see completing in the next year. Okay. Right, okay, so commercial real estate sentiments, what are the fund managers, the banks, and the developers thinking about? Very briefly, in 2024, did market performance meet expectations? 53% of those we surveyed say that yes, the market met initial expectations, and 22% said that the market outperformed and exceeded expectations. But what are the risks anticipated in 2025? Risks anticipated, rising costs, tenant demand shift, as well as government challenge regulations. So moving into 2025, what does everyone think? Apparently, the green light is for data center, industrial, and logistics, and the so-so would be for office, hospitality, and retail. During the year of 2024, how did our survey respondents rank real estate investment sectors based on growth in 2024? Data center ranked number 1, closely followed by industrial and logistics. And this is driven by the fact that there was increased demand for cloud computing, for big data, and higher e-commerce penetration across all business sectors, all industries, and all activities. Everyone has gone online. You cannot survive without your phone, right? And if you lose your phone, it's like losing your ATM cards. You better call all the banks. How are you going to do that if you lost your phone? Okay. Retail, hospitality subsectors, number 3 and 4 in terms of rank. They benefited from the gradual recovery in the tourism and leisure segments, with a number of tourists from January to November, 11 months 2024 stood at 22.5 million, an increase of 26% year-on-year. The expansion of these subsectors are supported by, for industrial, right, it's supported by the fact that the government launched the New Industrial Master Plan 2030, as well as the National Energy Transition Roadmap, the NETR plan. And in terms of TOD, we saw the expansion of MRT, LRT3, and then also MRT3 also announced. So all these have enabled some of our respondents to expand their portfolio. In terms of primary challenges that the industry players saw in 2024, 26% saw rising construction cost as a key challenge, and this has therefore been the key reason as to why property prices have gone up. It is cost-driven, a cost-push inflation. In terms of notable capital market transactions that we saw, you can take a look at this later, but you'll see that most capital market transactions that we saw were actually data center transactions. And market sentiments for 2025. 91% of our respondents are extremely optimistic about 2025. Especially in terms of our prospects. And the subsectors that industry players are likely to expand or explore in 2025 includes data centers, industrial, service suites, and hotels. And you can read this on your own later. Allocation sizes for commercial real estate investments, 34%, a third of our respondents say that they will expand their allocation of funds for investments in Malaysia's commercial real estate. Preferred focus region continues to be Klang Valley, 37% of our respondents, and 21% of our respondents say Johor because of the SEZ. Most of our respondents are positive on increase in capital values, transaction cap rates and yields, retail rates, as well as occupancy rates. So how important is ESG? We had to ask this because we all know with Trump coming up, really, ESG is thrown out the window. But then I will say this, we all know climate change is real, right? Right? I don't know if you guys feel it, I do. And having seen things like the LA fire and all, you would all know that climate change is real. You cannot deny it. And he's on his second term, final term, correct? He's not going to be there forever. So ESG is something you have to focus on for durability. Sustainability, durability. So key ESG priorities of our respondents right now, it's about baby steps. So it's about green certification as well as energy efficiency. That's what we'll be focusing on for real estate this year. And so, in conclusion, I know I took up more than 25 minutes. I'm happy to discuss any of your bright ideas, your pressing thoughts, deep questions. But over the past 3 weeks, Night Friend Malaysia has been very busy actually launching these 3 new papers for which you can download. You can also scan this when the slides are circulated across to you. Right before Christmas on 23rd December, we launched our data center research report, which only focuses on the data center sector. And then we launched our CREST report 6th of January, and just this Monday, we launched our real estate highlights, which is our thickest report, thickest ever, 55 pages. Thank you everyone for your kind attention. I wish you a happy new year, early Kong Si Fa Chai, wishing everyone rich, happy in the year of the Buddha.
We will now open the floor for a Q&A session. If you have any questions, please raise up your hand so we can pass you the mic.
Oh, we have time?
Yeah.
That's good. Okay.
Hi, Amy. Thank you so much for your presentation. My question is on Johor Singapore economics. Probably, maybe you can share your thoughts. What will be the next 12 months in terms of focus for us as an investor? Because in 2024, it's all about developers selling land. Okay, in the next 12 months, whether land banking selling will be one of it, or we can see that there's some spillover effect to the real asset on the ground. Thank you. Okay, maybe I have another second question. Because you also show that in Johor, that the capital market, the capital values increased quite significantly. But do you see that it will be supported well? Because if let's say we go on the ground, some of the condominiums, they are well sold, or even the Iskandar Malaysia, Iskandar Putri, you can see that it's already like being sold for the longest time, but you can't really see the residents living there. So my point is, it will not be like a spillover to the retail and other commercial activities. Thank you.
Thank you for your question. So it's about SEZ. SEZ is a huge geographic area. More than 3 times the size of Singapore. Okay, more than 5 times the size of Singapore. Now it's already expanded to include Desaru and Pengerang, right? So, when you put that into perspective, 5 times the size of Singapore, right? I think the positive segment for SEZ, for now, in 2025 itself, all focus will be on JB City Centre. JB City Centre, especially in terms of development. And in terms of office assets, retail assets, we also saw the Quad Group buying back JB City Square, right, where the CIQ is located. So in terms of investment assets, I see it mostly happening in the city centre. Areas like Iskandar Putri, Iskandar Putri's Iskandar Putri's story has always been driven by government incentives, by the HSR story, which doesn't exist anymore. For now. Yes, that story doesn't exist anymore. So my outlook for Iskandar Putri is not as rosy as it is for JB City Centre. Yeah. So if you're talking for the SEZ, I think that industrial continues to be the key sector to look at, which is why AME is doing extremely well. Manufacturers continue to look into the areas surrounding Senai and Kulai, and that area has always had consistent demand. It will continue to grow because it has always had a good fundamental, a good story to it. If you're saying whether or not SEZ will change the environment in Johor, I will say that I haven't seen anything that will drive the growth. You are fighting Singapore. Yeah, so I don't know enough about the family office sector to know whether or not we are able to fight countries like Singapore, Hong Kong for family offices. That's good news. Hopefully, yes. Hopefully, we can take spillover, right? Johor has always been about spillover demand from Singapore. But the early beginning of this year, the signing of the MOU hasn't actually said much, hasn't released much incentives. Yeah, they haven't launched that, and I think a lot of I've just spoken to our Singapore office actually after the announcement, and they say that the SME players, the MNCs in Singapore are still waiting for incentives because we must fight against the fact that Singapore has lower corporate tax rates. Singapore has availability of manpower and talent, which Johor does not yet have. So we must be able to prove that we can be on par, at least in these two areas with Singapore, before they will consider even moving across.
Perhaps the last question.
Hi, ID from Islamic. The last part of your slide, you mentioned about ESG. You mentioned about the incoming President Trump saying, don't bother about ESG, more business. But as fund managers, I think ESG has become very strong requirement as part of our portfolio, and even for funds that we are managing for leagues and all that. So in terms of the property that is going to be built or have been built, what is their take on ensuring that the requirement of ESG, even now may not be strong there, the take on ESG. However, for example, if you look at electric cars, right? It is growing very strong in Singapore, and we have cars coming in or residents from Singaporean coming in. So in building of the residential or even the work building, would the developer consider having more of these facilities on the charging, parking of the cars and all that? What's your take on this? Because I think even in Malaysia, one of the reasons why the take of electric cars is not what we expected, the main reason is actually from KL, can I go to Kelantan without having problem not able to charge? So the charging points have always been that issue. So in terms of residential area or work area, in the buildings, what are developers looking from that perspective? Thank you.
Thank you for your question. I guess your question is mostly about the growth of the EV sector and whether or not there will be enough charging stations. I think that there are a lot of plans already right now in place, as far as I know, to put in the EV chargers. However, I also need to caution that electricity is also a scarce resource, I would say. So is EV green? Is it greener than petrol? Okay, I'm going to be the person telling you that, or maybe all of you also believe, I don't know who drives EV cars here, but you all know what my concerns are. But what I'm thinking is this: EVs are still early in their infant stage of development. There will come a time when you can actually drive from JB all the way up to Penang without having to charge, or maybe JB Penang and then JB back without having to charge. There may be that possibility with the advent of technology. So we wouldn't know, just like how headphones have evolved, right? Your guess is as good as mine. Yeah. Right, so it's about the durability of the investment, the midterm and long-term outlook, right? Yeah. Good question, Dad. Maybe we can take that off the stage. Thank you.
Thank you, Ms. Amy, for sharing your
Thank you.
insight with us today.